And hello, welcome to this year-end wrap-up. These fantastic deals that we've been working on all year. We asked the funding specialists at Capitalise to come up with a top 5 list of those deals and those cases which they think showed the breadth of their experience, how they can turn things around really quickly if they need to. Lots of different products, lots of different lenders, and across all sectors for your clients. You will know that you have partnership managers that look after you as an account at Capitalise, but then once a case comes in which is funding, it gets passed to one of our fantastic specialists. And I am delighted to be joined by the head of funding today, Nick Richardson. Hello, Nick.
Hey, Kirsty. Yeah, thanks for having me on. Super excited to be sharing some of our highlights for 2024.
Fantastic. So let's this is our funding team. By the way, you'll probably know their names. You'll hopefully you'll have seen their faces and met them in person at some point. But let's crack on to the very first case, which is quite a big one. Buy-to-let mortgage, 7 months, which is not too bad for a property type transaction. There's lots of things that have to be hoops that have to be jumped through for this type of deal. Explain a little bit more about this one, Nick.
Yeah, so let's maybe just take a step back because actually a couple years ago we actually helped fund the development on this case, and it was over in South Wales, and it was quite like an old block, and on top you had residential flats, and on the bottom you had commercial units, and the client went through a development process, and it was kind of in that strange period where a few years back where costs were increasing and things like that. So what happened was that the forecasted cost of the development had gone up. It was over, that was the forecasted amount, sorry. And well, that ultimately meant that when we were looking to exit onto a buy to let, it was really difficult because we had to get the best sort of market leading loan to values that were available in the market. And then on top of that, a challenge that we also had was the commercial units below, a lot of them didn't actually have new lease agreements in place. So that also had an effect on serviceability. But because we were able to get such a great lender in place that could help on the residential side, we were able to get really high loan to values for the buy to let piece, and we were able to exit. And yeah, and now it's come out and really good. The flats look amazing, and we've also got tenants that have come in on the commercial piece as well, meaning that serviceability is way higher than it actually needs to be.
Oh, amazing. And I think we've taken over half of Cardiff with this deal, haven't we? It was quite a big development, wasn't it?
Yeah, it was a really big block. It was a really old block, and now it looks amazing, very modern, and completely changed. And there's a lot of amazing like commercial brands on the bottom that have come in and taken over the leases as well.
And didn't you say the owner, I remember this one, the owner had got some agreements in place quite early just to give that like comfort of covenants for the lenders?
Yeah, so I mean, like lenders like to see rental agreements and leases in place because obviously for them it shows affordability and serviceability. And I think in order to get some of the commercial tenants in faster, he did make deals with them at slightly lower rentals, but it meant that they had to come in and they had to come in fast. So then it got the lender again more of a comfortable position.
Amazing. Right, let's move on. Let's have a look at a different one. This time, an invoice finance deal, quite a small amount, but turning it around in 24 hours, that's pretty impressive.
Yeah, it really was. And look, I think one of the most common reasons, funding reasons that capitalize, unfortunately, is the last couple of days of the month, the last week of the month, business owners phoning in or accountants phoning in, being like, I've got this client. They really need funds in order to meet payroll. It's a very urgent funding requirement. And what happens is we can help. We've certainly got lenders that can help in this space. The real challenge that we have, though, is it's expensive. Like a lot of the solutions that will turn around fast and get money into businesses are very expensive. So what we're able to do here is we got an invoice finance line in place very quickly, also at the fraction of a price that some of these short-term loan providers offer, with no personal guarantee and no debenture. So for this was a massive win. I remember when it happened earlier in the year, simply because it just got in so quickly, and we were able to do it at such a great rate as well. And I think both the accountant and the client were super happy and super happy with the product that now they can use every month or whenever they need, whenever they have cash flow constraints.
Brilliant. And look, these things happen, don't they? You with the best will in the world, you can have clients that plan as much as they do. But something happens in the month, or and all of a sudden they can't make payroll, or they can't make the VAT bill, or whatever it might be. And that's where we can turn things around really quickly if we need to. Of course, if they have a strong credit score, that helps even more, but that's a different product. So we'll move on to the next one, which is, hey, it's our own favorite. C-bills, no. Recovery loan scheme, no. Now it's called the Growth Guarantee Scheme. It's still around. How did this one work out?
Yeah, so we've done quite a few of these products this year. I mean, the way I've always explained the growth guarantee scheme to accountants and businesses is it's not a mass market product, and it's here to help businesses that just fall outside the lender criteria. And I think what I really like about this product is if it wasn't available and if it wasn't in the market, it would mean businesses like this one here would either get a straight up decline or again they'd fall into this expensive short-term space, meaning that the rates are three times more than what they were offered on this particular product and also shorter term. So this business here, we're able to get them a reasonable rate and also over a 5-year term. So I think it really, really does make a difference for these businesses. It's not, like I said, it's not for everyone, but for those that just fall outside, it can make a massive impact.
Yeah, and I love the way that our team at Capitalise, very rarely will you get a client or a firm coming in saying we need a growth guarantee scheme product, or we need this type of product or that type of product. What they say is we need this amount of money and they need this amount of cash. And the thing that you do so well is you give them options and you say, okay, well, you might think that you needed this, but what about this instead? Such as that previous invoice finance case as well. It's really good that you've got that ability to, and that's the human touch behind the technology, that you've got that ability to read the market, understand the products, you know what the lenders are offering, and therefore you can have those discussions and suggest other things to the business directly or to the accountant. And that's great. So keep that up next year. Let's have a look at the next one. Asset refinance. So asset finance comes in all sorts of shapes and sizes, but this was quite an unusual one. And again, it was a different solution. So explain this one.
Yeah, so this is actually one of my favorite products. Every time I'm presenting or like talking to accountants, I always talk about this particular product. The reason being is it's not like again like not loads and loads of well, it's not available to all businesses because you do have to have hard assets available. But the particular challenge that we had here was this was a loss-making business, a lovely like family-run business, but it was loss-making. And again, when you are loss making, we can absolutely help, but it does limit your options available in the market. And again, it can limit your options with regards to term or price. But because they had all of these hard assets on their balance sheet, we have a lender. Well, we have many lenders that were willing to take a punt and actually go, look, we can use these assets as security. We can refinance them, get some cash into the business, and we can do it over a long term as well. So over a 5-year term again. And again, it was just that difference for this business. Again, we're lowering the cost for a business where SMEs have been absolutely smashed left, right, and centre over the recent years with inflation, increased cost of materials. And this was just another really great example where we're able to lower those costs and they could still get the funding that a lot of businesses still need.
Mm. Yeah, and this 4 weeks is pretty fast for asset refinance deal because you usually have to wait for valuations and surveyors potentially have to come out. But this one was great, wasn't it? Because the valuer didn't need to come out. They did a desktop valuation on this one, so it was much quicker, and they knew what the assets were, and there's kind of a second-hand market price for them anyway. So it gave them more comfort as to the valuation, the security that they had. So great that that one was only 4 weeks. Super. Now, from one of your favorites to one of my favorites, a management buyout. I absolutely love MBOs. I just think they're a brilliant success story, transitioning a business into the next generation. And this was for £1 million, an IT company. Took about 10 months to put it together, but that's not unusual when you're dealing with M&A transactions such as MBOs. So explain about this one, Nick.
Yeah, so this this one did have its challenges, and as you're aware, management buyouts have a lot of moving parts, and they can take a very long time. But this one in particular, we had an exiting shareholder that was not getting on and was kind of locking horns with the other majority shareholder, and so therefore it did take a lot longer than perhaps your average transaction. And unfortunately, business performance did take a bit of a hit due to the relationship between the two shareholders. Luckily, in this instance, we were able to find a lender who took a bit of a pragmatic view. There was management information and forecasts that were showing that the business was going to come around the corner, and that the majority shareholder, the staying shareholder, was the right person to take it forward. So it definitely had its challenges, but I think persistence was key here. I think the funding team did a great job on this one, where they were constantly communicating with the lender and the client, and then in the end, we eventually got it across the line.
Well done. Oh, I'm so pleased about this one. And I love the fact that you said the pragmatic lender, because it's not, you can't get trust built on paper. The reason that we've got these deals away and we've got these relationships with the lenders is because of the track record of Capitalise, and the relationships that each of you have individually with the relationship managers at the lenders. So well done on that one, to finding the right lender that overlooked the short-term problems that had happened as a result of the transaction. And you're quite right, I have seen that regularly when a transaction is going on. So really well done. Well, look, all 5 great deals there. Nick, thank you very much. Thank you to your team for pulling it all out of the bag again this year. And let's go and do it all again in 2025, shall we?
Yeah, absolutely. Bring on 2025, where we're going to again help lots of SMEs in loads of different and new ways as well.
Exciting. Thank you.